on Open Exchange. Welcome if you've just joined us. Carmen Nell, economist at RMB, also joins us now for an economic review of the week and looking forward to what's going to happen next week. Good morning to you, Carmen. The excitement yesterday about the tapering, or the non-tapering announcement, and then of course our own MPC happening on the same day. The one was a surprise, I suppose we could put it, and the other was not. No surprise, rates the same. But do you detect different signals in the way the governor talked about these things?
Well, certainly I think what came as a bit of surprise to the market in the wake of the FOMC's decision was how hawkish the MPC statement was. Certainly our interpretation is that the SARB MPC has become even more hawkish compared to July, and the focus is very much on inflation. So even though they've been given some reprieve or relief by way of a stronger rand, falling rates, and general improving sentiment globally, they still seem very reluctant to buy into the sustainability of this relief rally, and then also they remain concerned about what Fed tapering, whether end of this year, early next year, ultimately still means for rand risks, etc. So I think that was a bit of a surprise. So not so much the decision to leave rates unchanged at 5%, but really that they have shifted clearly in terms of their hawkishness, whereas, for example, the FOMC has backtracked in terms of their normalization process.
But as we were saying earlier, this kind of thing, markets react to things sometimes when they're surprised, sometimes when something new happens, there's a big reaction by the market. But this is one of those things where we know that tapering is going to happen. So it's not as if something has changed and will stay changed. It's simply a delay. So the market reacts with surprise. I suppose our Reserve Bank is taking that view. It's saying, well, yes, that's all very well this week, but we've got another FOMC in October, another one December, another one February, and one of those we're going to have tapering, so we've got to look at that rather than this news.
Certainly, and given that sort of the high beta nature of EMs is still very much in play, in other words, you could argue that the sell-off was an overreaction to the rise in Treasury yields. Similarly, the recovery, ahead of the FOMC and post-FOMC is sort of high beta on the way down. If you look at US Treasury yields, they only fell to, at the low point, over the last 2 days is 2.7%. Also, you've had some upside surprises in US data, which could provide a floor to US Treasuries in the short term. So certainly, I think it's very prudent and correct from the Reserve Bank not to discount this decline as sustainable. And as you correctly point out, tapering is going to happen. And based on the market's sort of reactive natures, when it does happen, you could see again a renewed sell-off in EM assets. The question is now whether that sort of view has been factored into the Reserve Bank's forecast. If you look at the upward revision to their inflation forecast for next year from 5.5 to 5.8, it does seem as if they've built in a bit of a buffer in terms of a weaker rand assumption relative to July, and then certainly also relative to where it's trading at the moment. So I think they have taken the prudent approach to global factors, and they very much focused on their inflation targeting credibility. So I certainly also think that any views, whether in EM broadly or SA specifically, around prospects for for the SARB maybe to cut rates again, or for some EMs to reverse recent policy tightening, would also be viewed as completely overdone.
Carmen, in your profession, I suppose there's some days when you're more in demand among your colleagues than others, and I suppose this might be one of them, where excitement in the markets, a bit of a surprise from the central bankers. So when you get to work on a day like this, what are the questions? What is the question that your colleagues are asking you, because they want to know what's going to happen?
Well, certainly I think, up to the FOMC decision on Wednesday night, it was very much when are they going to start hiking rates. Whereas now you're starting to see comments coming through, or concerns coming through, about could we be moving back into a cutting environment. Yeah. Certainly my view is that cuts are firmly off the table. The Reserve Bank has now, specifically in this week's statement, but you could also argue to some extent in the previous MPC statement, guided expectations away from easing. And I think now the relevant question to ask still is, when will policy normalization commence? And there it's still very uncertain, because the Fed Fed's backtracking on the tapering and also less emphasis on the unemployment rate has injected even more uncertainty into markets. And then the SARB is ever more data dependent, not just in terms of local inflation dynamics, but also what happens to global growth and global policy normalization. So I still think the relevant question is to ask is when they're going to start hiking rates.
Yep. Well, let's look at next week, PPI and consumer confidence. What are you expecting there?
Well, the PPI inflation we think will tick down probably to about 6.5%. That's for the August number. It printed at 6.6% in July. There are quite a bit of base effects at play that should ensure a short-term stabilization. The risk is still to the upside because you are starting to see clearer signs of exchange rate pass-through, but not alarming yet, certainly as it relates to CPI inflation. And certainly this week seems to have delivered the peak in the CPI inflation profile at 6.4% in August. With regard to consumer confidence, we were quite surprised at the bounce in the consumer confidence index from -7 to +1 in the second quarter. We think there's would have been renewed downward pressure on sentiment following petrol price increases, the run-up in inflation in general, and then importantly, the sharp moderation in employment growth. So we think the confidence index should move back into negative territory. And this will also be in keeping with the SARB's sort of still cautious view on domestic growth, that the consumer remains constrained. And an important factor there is that the credit environment has been tightening a bit.
Oh, thanks, Carmen. That's Carmen Nell. She's senior economist at RMB.